So I just had one sort of broader question for the markets, and maybe our experts can also weigh in. But Shell, FIIs have close to $800 billion in Indian stocks, and if the markets go up 2%, they'll make 16 billion, for example. But given the overall FII approach in the recent past, what do you think will happen, especially given the positions that they have taken during the election campaign period?
Siddharth, this is a very interesting question, and you know what will happen. This 23,110 that is most likely over the next 1 or 2 sessions will happen because of intense short covering by our foreign friends. You see, they've missed this rally, and if you look at how FY24 shaped up, the FII investment in India was the lowest in the past 5 years, and this is a time when Indian equities have probably made the best money in the shortest possible duration. So the fear of being missed out will be felt across the investing world in Southeast Asia, in the Middle East, as also in the Western economies. These people are likely to come up with bagfuls of dollars and buy into Indian equities as ferociously as they sold in the month of April and all of last year as well. So I am actually banking on the fact that you know, DIIs and mutual funds who hoarded on all these stocks and you know, had this festival of buying into Indian equities over the last 24 months will now sell these equities to foreigners. The foreign ownership of Indian equities, Siddharth, is at a multi-quarter low, and if you believe a foreign brokerage, there is this view that each week you will get $2 billion in foreign institutional inflows on Dalal Street. So I'm very, very hopeful that FIIs will buy from DIIs, ultra HNIs, and of course mutual funds.
Very clearly, if we take the COVID period as a cutoff and don't go back further into the past, there's a complete structural breakout as far as India's macro is concerned, and the world is taking note. So you spoke about what happened. I'll just recount a few. S&P going positive. Very clearly, the RBI's dividend, and that RBI dividend chart we should try and bring up on the screen again, is going to further help convince the global rating agencies, which I think have been blindsided for some reasons and have perhaps only looked at India with a myopic view, especially the fiscal consolidation, fiscal overall management strategy in the last decade. And now they will be forced to look at India afresh. That's point number one. Shell, just as domestic investors whose love with fixed deposits is perhaps now waning and they are moving into equity through the sip by sip route, taking sips of tea, as far as mutual funds are concerned, I think there is going to be one change. That's just S&P. Now take a look at gold being brought back. Many of you might say, what is the direct correlation with the market? Some who know the subject might try and go into deep details with what will happen as far as Forex is concerned. But what's the broader message? The broader message is of India and how much it has transformed in the last 3.5 decades. And that will set us up, Shell, because we are running out of time, for a budget which will now be looked at very, very closely. After the political stock exchange numbers are done and dusted on the 4th of June, a month later or thereabouts, 4 or 5 weeks later, we will see a big set of numbers which, according to me, will be the fiscal roadmap for the next 5 years of Modinomics. Already we know that the government secretaries, special groups of secretaries, have worked over the last 2 months on what is promised to be a 100-day agenda. And in fact, Prime Minister Narendra Modi, in his interview to the India Today group, had spoken about going not just within that 100 days, but also a special package for youth. So the next 3 to 4 months, beginning with the budget and perhaps even earlier, are going to be action-packed as far as the government's roadmap is concerned. And you will therefore see greater clarity in terms of, for example, the PSU pack, the banking pack, the infrastructure pack, and other areas where the government's dominance in many sectors still influences the direction of stocks share.
Siddharth, let me just end this show on a wonderful note. This is data sent to me by Mayuresh just now. The latest number for UPI transactions for the month of May is now at 20.45 lakh crore rupees, Siddharth. This is up from 10 lakh crore rupees in May 2022. Thank you, ladies and gentlemen. This has been such a lovely discussion on how the Lal Street will shape up over the next 1 or 2 days, over the next 3 years, and over the next 5 years. Thank you, Arunji. Feroz, it has been a pleasure. And Mayuresh, as usual, it was your goatee that did the magic as far as exit polls were concerned.
And let me remind our viewers, there will be continuing coverage, including Monday morning onwards, where we'll get you many more market masters to help you make decisions that are rational and that are founded in credibility with credible numbers. And just as the India Today My Axis poll has a status of its own as far as exit polls are concerned, I believe the guests that you are seeing now and going forward on Business Today Television, on our flagship Market Today show, and also on BT Bazaar, our Hindi offering, will add value to all of you as investors.